And if they do not have the oil, or there is a pause in the oil flowing from that region to their docks, there would be substantial rise in price. Well, what we're watching for very closely is the price of oil to go up in yen, because that's what's going to cause the Bank of Japan to have to raise interest rates. We did see the yen weaken substantially against the US dollar, get all the way back to close to 160 per US dollar. So it's 160 yen, exchangeable for 1 US dollar. And with all that being said, the Bank of Japan has tried to keep it between 140 and 160 for an extended period of time. And they've been successful in doing that. They've raised interest rates at key times in order to be able to strengthen their currency versus others. And if we get outside of that, it's going to snap back. And that is going to be, I think that the Bank of Japan's probably going to look for another scapegoat and reason to raise interest rates aggressively. They've already come out and said that they are way behind other nation states and other countries globally with their interest rate, and it looks like they will potentially raise somewhere between 75 basis points and 1%, which is 100 basis points. It's a big deal. It's a lot of movement in a very short period of time, but they do need a scapegoat because they don't want to be the ones that wreck the global economy when the reverse carry trade unwinds. So I do think we're pretty close here. Again, it's all contingent on conflict escalating there and that shipping lane being shut down. Maybe there's something else with Russia that gets involved. We've seen, I don't even know what to call it. Arsenal's not the right word, but many global superpowers are positioning themselves in the region to react to situations that might unfold. We've got U.S. aircraft. I don't know if the U.S. is who struck Iran earlier today. I'm sure that this feels like instability.